us on the phone line. Currently, the stock, in fact, was under pressure in yesterday's trade. Hi, sir. Good morning. Thanks so much for joining in. First things first, the top line's taken a knock of around 11%. Let's talk about your pig iron business. That's dipped by close to around 20%. So break that up for us. Were volumes lower? Because we know prices have been lower as well.
That's right. Lower volumes, lower prices as well.
All right.
That's the Q1 effect. And moreover, in fact, this is a trend that has been continuing for the past 3 quarters now.
Correct. So
pig iron NRs have come down by around 20% since last year.
Right.
And had there been no relief on the cost front, we would have found it even difficult to stay afloat. It's a bad market just now.
Okay. Mr. Paul, so when can we expect an improvement? Is the situation in pig iron as bad in Q2 as it was in the previous quarter?
Yeah, actually, I think the market is going a paradigm shift with whatever is happening around the globe with commodity prices. So all the material that was earmarked for exports from India has also hit the domestic market.
Correct.
On top of it, integrated steel plants who have iron ore, captive iron ore mines.
Right.
So for them, iron ore is at cost. And for all of us pig iron producers, we have to purchase iron ore.
Correct.
These integrated steel plant producers are also making pig iron now.
Right.
Instead of steel because of the mismatch in their steel melting shop capacity and the blast furnace capacity. So that pig iron is also hitting the domestic market. Scrap prices have come down. So what we are looking at is a new paradigm, and that is going to be the reality. And unless raw material costs come down substantially, and if there are certain policy initiatives which support the iron and steel industry in general,
correct,
I think you will continue to see very tight margins.
All right, so I want to know where exactly you source your iron ore from, and have you heard of any kind of constraints or some kind of movement, ban on movement of iron ore, particularly in the east part of the country in the last 1 week or so?
No,
all right.
I have not heard of any ban.
Okay. All right, so where are you sourcing iron ore from currently?
Our iron ore comes from Jharkhand and Odisha.
All right, and you're buying from the
Tata
open market.
Steel Mines.
Okay, Tata Steel Mines.
Tata Steel Mines from Jharkhand and Odisha. Yes, Tata Steel, one of the Tata Steel's mine is having some problem.
Right.
But otherwise, it is fine.
Right.
And we purchase some of the balance from other miners as well.
Okay. In absence of any relief from the government, what you've painted is a very bleak picture for you even going forward with integrated steel makers now producing pig iron, which would make the supply so much more than the demand. So should we assume that, in absence of any support, the results are not going to improve anytime soon?
I guess so. The situation is bleak, not just for the pig iron industry,
Okay.
but if you hear from the other iron and steel manufacturers also, you'll hear a similar story.
What is the capacity utilization that you're operating at?
We are operating at 100% capacity.
Okay.
That is not a problem. But I'm saying prices are down, and unless actually consumption picks up in the country, these prices are going to stay at where they are, or worse, they could go even lower. So we don't know.
Correct. All right, sir, I wanted to ask you, because, I've been speaking to a lot of industry experts. They've been talking about coke prices falling. Do you use coke? You use it, I think, for some part of your operations, coke prices?
Yeah, absolutely. They are a blast furnace, mini blast furnace-based operations.
Right.
We use coke, and coke is 60% of our cost, 55% of our cost.
Okay, and so no benefit came out of that because the price erosion was much more than coke price fall?
Yeah, that is one. The price erosion is around 20-25%. In some markets, it's as huge as 30%. The lower coke price was surely a relief, and we are actually importing coke now. But the ports are jammed. So if we get low-priced coke, it waits at the ports, and the demurrage is huge.
Okay.
So it neutralizes all the advantage that you have of the lower coke prices globally.
So your ductile, business has done a little better. Your revenues have gone up. At the EBIT level also, the situation is slightly better. How is the performance in ductile iron? What can we expect going forward? And would you consider, maybe tilting the balance more in favor of ductile rather than pig iron, considering that right now that seems to be doing better? And is that possible?
Yeah, it's possible. In fact, the ductile iron business has picked up, not only because the raw material, which is the pig iron, let us say, or the hot metal, the liquid form of pig iron, the that prices have come down. So the margins that the ductile iron pipe business has improved, no doubt about it, but it is coming down. There is always a lag between these two, let us say, links of the value chain.
Correct.
So that lag will... You'll see the effect of the lower prices going forward as ductile iron prices also come down.
Correct.
But that surely is a business that's a bit of that is doing better, and we should ideally be able to maximize that. We are running at 100% capacity. We have added one more machine.
Correct.
And we are looking to expand in that part of the business, sure.
All right. So also in terms of your iron ore sourcing, you said you're sourcing some part of it from your Tata Steel's mines. At what price do you buy this particular iron ore? Is it at market price? Is it at a bit of a discount?
Yeah, it is at market price. We are two different listed companies, so we are kept at an arm's length.
All right.
The corporate governance is all there.
Okay, so we leave it at that. Thanks so much for joining in, and we wish the situation improves going forward.